If you're struggling to make rent because rents are skyrocketing, you're struggling to buy food because food prices are rising, you're probably not going to save as much and you're probably not going to invest as much. Definitely true. But here's the thing, that ETF, while it'll be available to everyone and the average investor could buy 10 Satoshis, you don't have to buy a whole Bitcoin. That's the fallacy, right? You can buy as much or as little as you want of any protocol. But that ETF is really targeting the all-seeing eye people, right?
Yeah.
The top 1%.
Yep.
And they're the richest they've ever been, super rich. And these Merrill Lynch accounts, these boomer retirement accounts, they're flush, and they're gonna put 1%. Because here's the thing about Bitcoin is it's 0.0 correlated to bonds, and it's 0.15 correlated to stocks. It's the perfect diversifier for your portfolio. So when you add Bitcoin to a diversified portfolio of stocks and bonds, the risk of your portfolio goes down, not up. So even though it's got high volatility, it's got 80 vol, that volatility is uncorrelated with the volatility of other assets. And so if you had taken 1% 5 years ago and put it in Bitcoin and took it at 0.5% from stocks, 0.5% from bonds, your portfolio actually would have outperformed by 250 basis points per year, through the ups, through the downs, all of it. 250 basis points per year with less vol. Now, if you've gone back all the way for 10 years, it's even better. And if you'd done 2% or 3%, the numbers get stupid in a hurry. And the law of large numbers says that a $500 billion asset is not going to be as huge upside as a $100 billion asset. It's kind of like Amazon, right? Amazon's compounded at 41% for 27 years. It's pretty amazing, right? But it compounded way faster when it was smaller than when it was big. That's just the law of large numbers. And it has the same volatility as Bitcoin. This is the funny thing about Amazon. Everyone owns Amazon. Every single person owns Amazon. In an index fund, in your Robinhood account, everyone owns Amazon. It's a good company. When was the right time to sell Amazon? Never. But who actually bought it 27 years ago and held it to today? No one. Right? Because the volatility is so big every year, every single year, 27 years, every single one. Double-digit drawdown, average 31%. So every year, on average, you lose 31% of your money. So what does the average person do? They've got it. It gets drawn down, and they sell it. And then it goes up, and they buy it back. Like, why didn't you just hold it the whole time?
That's market psychology at play right there.
Yeah, buy high, sell low. That's that book I read. That's what it said. Buy high, sell low.
It's a scary thing about humans, right? We buy what we wish we would have bought. When the pain gets so bad. When did the average person buy Bitcoin? Not at 11,000 or 10,000. They bought it at 69,000, 67,000. And over time, what's going to happen is this recession. So back to this recession thing. The reason the recession and what Siwo was describing at Costco is so important. Those are the result of the withdrawal of liquidity. Right? That's what the Fed has done since its inception in 1913. It controls the economic cycle by pushing liquidity in and expanding the economy, or withdrawing liquidity and contracting the economy, so it doesn't overheat. Now, what overheating? Right? We're barely at 2% growth. The average person doesn't have $500 to pay an emergency. There's no overheating. It's simply about command and control, and again, concentrating the wealth at the tippy top through devaluation of currency. So what's likely to happen is, with the tailwind of the halving and the tailwind of the ETF approval, if a recession actually happens and the average person is really struggling, what are they going to do? They're going to cut rates and give out free money again. We're going to be talking about universal basic income again. We're going to be talking about handouts. Oh wait, there's an election coming up. We're going to be talking about forgiving student loans again. We're going to be talking about giving you rent subsidies, or what they did in California, where they sent you a check for gas, right? They literally sent you a check to buy gas. So buying votes is going to become very popular. And that stimulus, some of it will go to pay bills, but some of it will leak into markets. But the real driver in the short run isn't the average person, which I think it's interesting. Like I'm sitting here in Vegas, and I'm walking around last night, and I'm not a big gambler. I don't love Vegas, but I think it's a cool place to come. If you were walking around the lobby, there's no recession. I mean, people
like
were
Beyonce
spending money.
tickets go for like 3,000, on Taylor Swift. So
yeah, I mean, oh my God. But then I'm thinking, well, here's a crazy stat. I learned this yesterday from someone here. They have a slots tournament, and the buy-in for the slots tournament, like slots tournament, there's no skill in slots. I mean, a poker tournament, I get, right? Maybe a blackjack tournament, I kind of get. Still not a lot of skill, but a slots tournament, what the hell? $30,000 buy-in. You know what the average income of the person in that tournament was?
Probably 50K.
75K. Half a year's income. Now, I guess the way it works in a slots tournament is all the money goes in, and then if you get out right away, it's like a poker tournament, you get a little bit back. And the longer you survive, you get, so you don't lose it all. But here's the thing, this is what they said. You don't lose it all in the tournament. But what happens is they hold the tournament from 3 to 8. Well, guess what you do the rest of the time? You lose it all. It's like, oh my God.
You just watched a clip from episode 76 of The Next Block. If you enjoyed this clip, smash that thumbs up button and subscribe to the channel. Also, be sure to ping that notification bell so you don't miss some of our fantastic upcoming episodes with Anthony Scaramucci, the founder of Skybridge Capital, Jerry Chu, the founder of Lofty AI, tokenizing real estate on the Algorand blockchain, and so many more fantastic guests. You're not going to want to miss those, so ping that notification bell, subscribe to the channel, and then let us know down in the comments below who you want to see on the podcast next. We appreciate each and every one of you, and we hope to see you in the next video. Thanks.